the U.S. and China. They're beginning a new round of trade talks today in Beijing. Joining me right now is AlphaOne Capital Partners founding partner Dan Niles. And Dan, I hope you were listening to that intro there. You saved our viewers a whole lot of money. Thank you.
Thank you very much.
You were with us on October 24th, and you were really skeptical of what was going on at Apple. So I've got to talk to you first about that. The big shock, the company sending shock waves throughout Wall Street a week ago after cutting its sales forecast last week, citing weakened China sales. It came as no surprise to you. What's your take on what we heard from Apple and where the company is today?
Well, I think the big thing that concerns me, Maria, is does Apple recognize what the problems are? Because what they're citing as the problems, which is, well, we're in this trade dispute with China, and the dollar is really strong, and so, upgrade rates are being pushed out as well. People are buying new phones less frequently. I think those aren't really the problems. And they should have known a lot of this ahead of time, because if you look at things, you say, well, China's been weakening for a while. Their Apple sales to China were up 21% in March. They went to 19% in June. They went to 16% growth year over year in September. And Brazil had gone negative, and India was flat in the September quarter. So all of these issues they should have recognized, and so I think that's a forecasting problem. The real issue in my mind is the following. If you look at this year, they're trying to sell two phones above $1,000. Their average ASPs were up 28% year over year in September to $793.
That's average selling price.
Average selling price, yes. And so if you look at that, you say, wow, that's a lot to be pushing into a market when you've got China, whose average GDP per person is sitting at 10,000. And in India, it's at 2,000. That contrasts to the U.S. at over 60,000. And so how are you going to sell ever more expensive phones to emerging markets? By the way, the best-selling phones in those markets are around the $200 to $300 level. This is why Apple's been losing market share. They actually went from the second largest vendor of phones in the world. Huawei passed them out of China to become the second largest. And now you've got Oppo, Vivo, and Xiaomi, which are three vendors also in China, sitting at about 9% or so share, and Apple's at 11%. Those three could pass Apple this next year. So I'm not sure Apple realizes the real issue is that they're trying to sell a Ferrari into markets that can afford a Ford.
Yep.
And that's what they're dealing with.
That's a great way to put it. So basically, this sounds like an emerging markets problem. And Apple's selling into the emerging markets, and they have way too high expectations.
Exactly.
Emerging markets are slowing down. And when you look at the per capita, $10,000, $16,000 the per capita in China, how is that pushing? And you said this back in October when we were together.
Yeah.
How would people afford a $1,000 phone?
Yeah, and I think that's what people are really missing. I think the other thing is that Apple keeps going back to this narrative of, well, don't focus on the units of phones, focuses on services and our installed base. And if you listen to what they said, oh, look, our installed base grew 100 million devices over last year. If you actually go back and you do the math on this, a year ago they said we have 1.3 billion units of installed devices, not customers, but devices. If you add 100 million to that, that gets you to about 8% growth this year. Now, what they also said a year ago is that 1.3 billion is up 30% over the prior 2 years. So clearly the installed base is slowing down. If you look at what they said on services, they said we expect services revenue to double from 2016 to 2020. Well, we have the 2018 numbers. So the services revenue has grown 25% compounded over the last 2 years, from $25.5 billion to $39.5 billion in 2018. You say, well, $25.5 billion times 2 is $51 billion. Wait a minute, they're telling me services are going to grow 14% compounded over the next 2 years. They grew 25% over the last two. So that's slowing down as well. Right. None of the Wall Street analysts want to talk about that because they all have buys on the stock.
Right.
Not all, but,
a lot of them
are really
You're
bullish.
Absolutely right.
Only one person has a sell.
But look at this chart. I mean, we're looking at a one-year chart, and really beginning in October, things just fell out of bed, and that's when you were on this show talking about some of the weakness there. Tell me about valuations. I mean, is there any reason to believe, okay, we've got a slowdown, but the stock is at a better price? Should I buy it now?
Yeah, that's a great question. Here's the issue I have, is the stock's sort of in the middle of the valuation trading range. And that would normally be okay, but what you also have going on is the fact that the smartphone industry, for the first time in history, is going to shrink in 2018. It looks like it's going to shrink further in 2019. So if you say the valuation's in the middle of the range, but the industry that they're in is shrinking, and if you look at the PC industry in 2011, that's when replacement rates really started to lengthen, so people went in to buy PCs less frequently and upgrade.
Right.
The market shrank for 6 years. This will be the first year since 2011, 2018, that it actually grew. Wow. I think the smartphone industry is in for a multi-year segment of it slowing down.
Well, it's interesting because when we were on the phone, you were saying, well, look at like how long you have your car. You know, a replacement car, you're in your car for how many years? 7 years?
It's actually, in the U.S. today, the average car on the road is over 10 years old.
10 years old.
Yeah.
And so, I mean...
For the PC, it's 6 years.
But the phone...
is only at 3 years.
3 years.
So okay. You go, okay,
so
that
does
can
that
lengthen
become
way more.
4 years? By the way, I know 5G is a really big deal. If 5G is on the horizon, and I know that I want to get the latest, greatest on my phone, but an iPhone is not compatible to 5G, why would I buy an iPhone?
That's a really good point. And so I think when you think about 2019, 5G is going to roll out. It's going to start rolling out the carriers in the June quarter. Well, Apple doesn't have a 5G phone out. So if you're trying to convince somebody, hey, you want to spend $1,000, well, they'll go, well, does it have 5G? Well, no. So then they'll wait. So I think this year could actually be worse than last year in terms of how much the smartphone market shrinks. Apple not having 5G is an even bigger problem because carriers like Samsung are going to. Samsung's even going to roll out a foldable phone. They'll only ship like maybe 1 million units, so it's not much. But again, another feature that Apple's not going to have. And if you're trying to sell the highest priced phones out there, it's really hard to convince consumers to do it. So I think Apple is focusing on, the wrong things right now. That's one of the things I put out in a tweet recently. For those viewers who are interested, at Daniel T. Niles is what I try to put my thoughts out on more frequently.
Yeah. I'm gonna retweet you because I've got my followers who also gained great value from your commentary. Talk to us about the broader market for a moment here, Dan, because valuations have gotten better.
Yes.
But the volatility is there. And on the other hand, you've got valuations getting better and the Fed saying we're not in any rush. Isn't this a good time to buy stocks?
Yeah. I think Dagan actually set this up really well. I mean, she talked about the fact that non-farm payrolls came in at 312,000. And the big thing, which she rightly pointed out, is that the Fed's Jay Powell said, look, the balance sheet's not on automatic pilot anymore. When he said that on December 19th, the market's absolutely freaked out. On Friday, he said, look, we're flexible, we're listening to the markets, et cetera. People were like, oh, you know what? Maybe this is like 94 to 95. And what I mean by that is in 1994, the Fed raised rates from 3% to 6%. And then they stopped. 94, the market was down 2%. 95, the market went up 34%.
You want to buy stocks here?
I like them.
You like stocks right here. Dan, it's great to have you on the program. And I know you're looking at other areas as well, like energy.
Yes, energy, banks. I own JP Morgan. You're going to have Jamie Dimon on later. I like China as well, and we own banks in China and energy stocks.
Dan, great to see you.
Great to see you.
Dan Niles, AlphaOne Capital.